The following was recorded in front of a live studio audience at the Studio 21 Podcast Cafe. This is the United Podcast Network.
Welcome to Easy Money New England.
Oh, can somebody help us here?
We can, because we are real estate and mortgage professionals. There you go.
Just come in and browse.
That's right. Come on in, listen up and learn.
How long do you intend to browse?
In a short period of time, our panel will teach you some tricks that might make your house buying easier.
You don't ask her how long she intends to browse.
Might not be looking for a mortgage today, but we'll get you ready.
You don't look like browsers.
Are you looking?
No, what do browsers look like?
Yeah, maybe I'm half browse.
On his father's side.
This is Easy Money New England.
Let's show the lady we're browse.
With your host, Brian Damico.
Hey, look at us, we're browse. One more word out of you and he gets it, all right? Come on.
Hello, and welcome again to another edition of our show, Easy Money New England, where every week we bring you money-making opportunities or money-saving tips, all in the areas of real estate. And this week with us, we have John Cohen. John is president of JC Property Group, Inc. John has been investing in real estate since 2010, having started with purchasing tax deeds and tax liens. In 2013, he did $3.247 million in real estate transactions. In 2014, he switched his focus to the multifamily asset class and became a member of a group that closed $70 million worth of transactions. Before leaving Marcus and Millichap to focus 100% of his time on the growth of his company, he was a team member of a group that sold over 26 multifamily properties in the Brooklyn and Queens area. Prior to his involvement in real estate, John was, prior to his involvement in real estate, John was a licensed Series 7 and 63 stockbroker, but decided that brick and mortar investments were far less speculative than the stock market. John played baseball at Queens College, where he graduated with a degree in economics. So, without further ado, John, welcome to our show.
Hey, Brian, thank you for having me.
So, John, what's very interesting is you started by doing tax. Is it tax deeds? Buying tax?
Yeah, I did a mixture of tax deeds and tax lien purchases.
And I've seen infomercials on this. I've seen some different strategies around this, but I don't know anybody that actually was successful doing this. Can you tell us how you got into that?
Yeah, I was while I was a stockbroker, I was just looking online for different things to do, and was reading about those. Was very interested in it because you could buy properties for super cheap, and I figured I could start experimenting in that space, and I just started reading about it, calling some counties, finding out when the sales were, showing up at some auctions, and sort of learning while I went.
So these auctions, they were put on by the cities because of tax liens. They weren't paying their taxes, and they became up for auction because of the city.
Correct. So it's the county.
The
county runs the auction for people's basically delinquent taxes, and obviously it's like monopoly more or less. Every single county has its own rules. So the way you play it, the way I play it may be different. So every county, every state, the states have their more or less guidelines, and then each county does it a little bit differently. So we owned a single family house in Pennsylvania, so I started there. Got very familiar with the different types of sales, the rules that county had. And then I took that and, I built that out into other areas and sort of replicated what I did in that one county from the education standpoint to learn how to do it. And then, went out and did that in, a couple other areas.
Now, I've heard people say that you can actually go to the county, the city hall, and actually pay the taxes for that person. So when that, when they do go to foreclosure or they do try to take the house, the person who paid those taxes can just take over the home? Is that how it works, or does it still go up for auction?
It depends. So, depends on the county. There are plenty of counties in the country where it's over-the-counter sales. You literally walk in, upstate New York is like this, where we bought 3 pieces of land. You go up there, walk in, write a check, and you take ownership of the property that day. No foreclosure process, no nothing. More or less, you're now the rightful owner of that property. So it just depends on where you are. But yeah, for some places, that's exactly what you can do. You can walk in, buy the property for the back taxes, and now each county has what's called a redemption period. Some are longer, some are shorter. But yeah, you can pay the taxes, and then the current owner has the right to redeem those by paying you back what you put down plus an interest rate defined by the county. But there are other places where you can walk in, buy the property, and move on. Now, I haven't the last tax deed I bought was in 2015. I think was the last one we bought. So it's been a little bit since I've been, and that was in Pennsylvania. So I'm not as versed as I used to be. But it depends on the county. But you are correct. You could go in and in some areas just buy the property.
Very interesting. And if in fact they still live in the house, is it now your responsibility to make a deal with them to move out of the house? How does that work? Because I know that that could be very difficult.
So it depends. Depends on the rules. There were plenty of properties that we bought that there was a renter living in there, paying rent to a landlord that hasn't paid the taxes in 6 years. So we worked with people. We worked with whoever was on site, and there was plenty of times where we'd buy a property during the holiday season, and we were not in the business to uproot people. Now, if it was, we also had a lawsuit where a nephew of an aunt lived in the house and he tried to fight, and that's a totally different situation. He just was not paying the taxes because they didn't want to, whereas a tenant that has no idea that the taxes weren't being paid, it's definitely a different situation for them. And you walk on eggshells. You don't want to displace people and scare people.
Right.
At the same time, if someone's willingly not doing what they're supposed to do, then obviously that's a totally different approach. But it was it was entertaining for sure. The different stories you'd run into.
And it seems like you graduated. So you went, instead of doing tax buying homes the taxes weren't up to date, you moved into more of investing in multifamily?
Correct. So I was a commercial broker, and I just saw the principal side of the business and the long-term potential. So I wanted to be on the other side of the coin and not a broker. As a broker, you're only as good as your last deal.
Correct.
Whereas on the principal side, you maintain a little bit of cash flow depending on the deal. Now, obviously we do deals with a little bit of a shorter horizon, so you're still deal driven. But with that being said, you do have the option of holding it more longer term or going into the deal with a different business plan where it may be long term focused. But I thought multifamily was a great asset class to be in. I think the long term component of it was something attractive, and then the cash flow component of it, because obviously that's why we do real estate. So yes, I thought multifamily was a great space to be in, and that's where we spent a lot of time.
So when you look at properties and you're looking for your next property, do you look at is it the cap rate that you look at first? I mean, how do you kind of see if the value's there to make an offer?
So we always start with the market. Cap rates are a very, very subjective piece, especially in today's market. We're in the tail end of the cycle, or probably closer to the end of the game than the beginning of the game. So you're just that old theory of buy an 8 cap on in place numbers. It doesn't exist today. An 8 cap today is probably a 10 or 12 cap. Realistically, if the market was not as frothy as it is.
Yeah.
So we're super market focused, where we're either super market focused or opportunistic in a way where there's a significant problem on a property that we know we can fix. That's a totally different buy for us, and it's not necessarily cap rate driven. It's more, what's the story with the deal? Is there an opportunity to increase the value of the property through operations, or through things that fixing the problems, or market driven, where we're in a super good market, great population growth, great job growth, not a lot of supply coming online, and a lot of demand. Those are more or less the things that we focus on, as opposed to a cap rate buy, because I just don't think that those cap rate buys are necessarily there right now.
Gotcha. And do you invest over state lines? So do you invest away from your state, or is it pretty much where you can see and touch it?
Everything. We own nothing in New York. the landlord-tenant laws are not in our favor here. So, we definitely look for, super business-friendly states. First and foremost, that check off the population growth, job growth, supply and demand story. I live in Long Island, New York, and, immediately around me, there's a ton of new supply. Cap rates are, below 4%. So there's really, a different type of opportunity for appreciation play and long-term, upside driven as opposed to operational cash flow. So, we own stuff in the Southeast and the Midwest, all basically south of, North Carolina and the Midwest and that Ohio, Northern Kentucky, area.
Yeah. So what are some of those, hot markets that you would say? I mean, we had someone on the show who said Tampa Bay, Memphis, Tennessee.
Do you look specifically for Republican states, John?
Not necessarily Republican states, because, in the states, once again, states are going to have their rules and each county is going to be a little bit different. But we definitely look for favorable landlord-tenant laws. So, we're in the Carolinas, Florida, Georgia, Alabama, Mississippi, Ohio. So, yes, most of them are Republican states, but it doesn't necessarily have to be a Republican state for us to buy something. It just has to be the landlord-tenant laws are more in the favor of landlord, which, yes, typically falls into those Republican type states, but not necessarily politically focused. It's more driven by
because the Republican side tends to be more business driven.
Correct.
Whereas,
no, you're 100% right. I mean, there's definitely a Republican component of the places that we look. They are more business driven, and they are typically more favorable to landlords as opposed to tenants. But yeah, that's a big thing. We just don't want in the city. When I was a broker, you could have a tenant living there for a year and a half before you even have a chance to evict them, and you lose out on a ton of income. We like to be, get them out completely. You don't pay your rent on the 5th, you're getting an eviction filed on the next day, whereas you can't do that in New York. You file an eviction, just doesn't mean anything. So we just want very favorable landlord-tenant laws.
And how do you go about picking a property management company? I mean, I know that, a lot of the listeners, if they're listening out there, they're saying, well, I would love to do that, but who's going to take care of the property?
That's a great question. Given that we've had very good relationships in this business, we've been doing it for quite some time. My partner, 30 years at Cushman Wakefield. I worked at Marks & Millichap. We had a ton of clients and friends that have done this. Word of mouth has helped us, who they have used. But in addition to that, if I was starting out contacting brokers, ask the brokers who the managers are that are good, because there is a level of trust in this business that you have to have. And we have third-party management, and we use regional companies. Now, one of our goals in the next 12 to 24 months is probably build out our own management company, because we are sizable. We're approaching the 2,000 unit mark. Probably by the end of this year, we'll be closer to 4,000 units, maybe 3,500 units. And they are regionally located. We have a lot of properties, within a 3-hour drive of each other, so we can support in-house management, which will give us a little bit more control. But talk to brokers, talk to other owners in the area that are using third party, and find out who they like and who they don't like. Quick story: I have a buddy who's buying a property in Columbus, Ohio. He texted me last night, said we ran into a snag with their manager. Who is it? He gave me the name. That's the guy I fired when I took over a property immediately. He has a bad publicity out there, and it's just use your network. Reach out to people and find out what they know about those individuals and what they've done, because that's how you're going to find good third-party management. It's not just going online, Googling property managers and hiring someone. You got to do a little bit more digging, because there is a lot of trust that goes into it, so you want to make sure you're being pointed in the right direction.
Yeah, I've seen some horror stories with management companies for sure. And you say you have about upwards of 2,000 units. Now, is it like a syndication where you have a group of people kind of invested in a portion of the real estate, or how does that work?
Yeah, so we've gone completely up and down the capital stack. So we've been, we've worked with family offices and institutions all the way down to friends and family. So, and we have private deals that I own personally, or, me and a buddy owns, or me and a friend own, or me and my partner own with no partners. So we've gone the complete circle. So, we've worked with the institutions, and we've bought deals by ourselves. But yes, so some of our deals are syndicated. Some of our deals are our own capital, but even in our syndicated deals, we're not a group that just raises raises all the money and has no money in the deal. We invest 10 to 20% in every single deal we do with our own capital, either myself or my partner, where we are at least 10 to 20% of the syndicated capital, because we're not going to take on the gamble with other people's money. I just don't believe in that. We typically have the capital to close on a deal where we will either post syndicate out after we close, or we will co-invest with all our partners, a pro rata amount, so they feel that we at least have a vested interest in the deal.
So if I'm a listener right now and I say, well, you know what, starting from scratch and getting to know the brokers and getting to know the property managers, if someone wanted to invest and say, hey, John Cohen sounds like he knows what he's talking about, I'd rather just invest with him. How would it work, and how, are you open to people kind of checking you out on the website and looking at some of the deals that you bring to the table?
Yes. So, the first thing that we do is obviously just, for, SEC compliance, obviously we have to have relationships with all our investors. So if it's just straight, listen to a podcast, filled out our investor questionnaire, and I got $1 million or I got $50, that's not necessarily something, we always do a 45-minute, 30 to 45-minute interview or introductory call with any investor, find out what their goals are, what they're looking for. Because if someone's looking for a quick flip, easy money, that's not necessarily, this is not might not be the deal for them. Whereas, some people are more long-term geared, or, they're trying to build wealth, something like that. That's a totally different conversation. But we have our website, our investment company is called Toro Real Estate Partners. You can go on there. There's an investment questionnaire. You fill it out. You'll have someone internally reach out to you, probably set up a call, and then it'll be myself to, do the 30, 45 minute, just trying to get a little bit more information and find out who that person is, what they're looking to accomplish. And then depending on the deal we do and how much money we raise, you may have to be an accredited investor. You may not. So it depends if we do a 506 or a 505 private placement, where you may have to be an accredited investor. But there are some deals that we've done where we've raised less than $5 million, where you did not have to be an accredited investor. You either have to have experience and or other qualifications to invest. But yes, people are, if you're starting out, there is a lot of work that goes into it. I would highly recommend educating yourself on the space, talking to a couple people about the space, and find out if it's something, if you have a full-time job, if you think you can do it or you want to do it, or investing with a group out there that has a proven track record of success and delivering a finished product.
When you say other qualifications, are you talking about sophisticated investors, somebody that has $1 million liquid?
Yeah. Yeah, either a sophisticated investor or someone that has experience. There are a ton of people that have balance sheets that could be a balance sheet partner for a deal, or they have invested in other syndications before, or whether they have a net worth requirement, or whether they have a liquidity requirement. So yes, it could be a sophisticated, accredited, or just an investor that meets other qualifications, which is a regular net worth, liquidity. Because one thing we won't do is if someone has $50,000 saved and that's their rainy day money and they want to get involved in real estate, we have that call frequently where someone says, oh yeah, I got 50 grand. It's like, no, we need to see, what we like to do is do an evaluation on all of our investors, because it's not always about the sponsor. It's also about who the investors you allow in deals. Because I can tell you nightmare stories about working with certain investors that were, I recommend everybody do a little bit more homework on who's giving you the money. For a couple standpoints, you don't know who they are. You want to make sure that they're just as good and qualified as you are, because you don't want to have a battle with the guy on a weekly basis, arguing left and right. I want my money. What's going on? It's been 3 days since you wrote the check. It doesn't happen that quickly. Yeah. So you want to know just as much about them as they know about you, and you want to know what they're what they do for a living, what's their income look like, and you want to verify them just like they would verify you, because you want to make sure they can withstand the investment they're going to give you. And that is one piece of advice I give anyone looking to start. Don't just take money from somebody. Not only is it not legal or right, but you also you don't want the stress of dealing with fixing a property and operating a property and the management side of it. And then also you have a guy calling you every 15 minutes asking you what's going on. It's not day trading Bitcoin where it goes up and down 30% in a day. These deals are more long-term focused, and your occupancy doesn't go up and down 20% in 2 hours. So just make sure you know who your investors are and what their capability and threshold is to make an investment.
You bring a good point too. I mean, you said there's no such thing as easy money. The name of our show, Easy Money New England, where we always like to say there's no such thing as easy money. So it kind of plays right into our show title. But a question I had too is if you took money from an investor and he was accredited, and are you, because he's a partner with you, are you now susceptible to if he got a divorce, or then you're going to deal with that, and if he gets into some legal problems, how does that work?
Absolutely. And now, divorce, that's one topic where, yes, you may, their attorney or someone may reach out, and how he structured it. That's, another thing we do with all our investors. We will set up a time for them to sit down with their accountant, their lawyer, our accountant, our lawyer, and structure the deal properly. Because sometimes, super high net worth guys are more tax focused, or some people have kids and they want to, there's some trust. They want to put it in a trust, and they want to structure the deal properly for them. And there are people that are divorced and realistically are looking to hide money from their divorce, their spouse. So there is you definitely want to know that. Now on the criminal side,
yeah,
that's something that's out of our control. We want to look at every individual, but if they do something wrong, yes, there is the potential that it could affect the deal. Now, if they invest $100,000 on a $5 million deal, the FBI is not coming in to freeze the asset. It's not that critical. But yeah, you do want to know who people are, and if they make a mistake, does it hurt the deal? It potentially could, depending on who they are and what they've done. But that's why you want to know who you're investing.
That makes a lot of sense.
And you want to never get in bed with a guy out of the box that has some type of past. But stuff happens. It's never happened to us, thank God. We've done a very good job working with our investors. Whether they've fallen on hard times and they need money back, or whether we knew who they were going in and say, hey, maybe $200,000, just put $50,000 in, because that's a lot of money and maybe that's not for you. So we've done a good time betting up front to protect some of that. But you definitely have to understand who the people are, and that's one piece of advice I can give anybody. Just make sure you know who your investors are, because it could be a headache that's avoided up front.
Okay, so say I'm an investor, and say we one of my listeners is that they hit it off. You know who they are. They put $100,000 in a deal. It's a rather large deal. Is there reporting that goes on monthly or quarterly? And then,
yes.
Yeah. And what kind of reporting?
So that's a great question. What we typically do in all our deals, we'll do periodic updates depending on the deal. If we buy a super stable deal, maybe it's a quarterly update because there's not much going on. If it's a heavy lifting value add deal where we have a deal right now, we're spending $6 million on a 338 unit. Those updates are weekly or bi-weekly, where we send out an update periodically, a lot more frequently, just let people know, hey, we've hit this hurdle. The construction's done. We just got our CO. We tend to update more frequently on the heavier lifting deals. With that being said, bare minimum, you'll get either a semi or twice a year update webinar. You'll always get a quarterly update on what's going on every quarter, and then depending on if there's distributions or not, an email with an outline of what's going on, an update on we hit our income goal for this quarter, so on and so forth. We like to stay up to date with everybody. In addition to that, we also typically like to do either a quarterly phone call with everybody just to let them know what's going on, and then we also host an event every year where we invite all the investors to come in, and that's more or less just like a holiday party type event, so you can come get face-to-face FaceTime interaction. And then our doors are an open door policy. We welcome all investors to come in at any point in time, stop into the office, sit down, see what's going on. And then I also encourage all the investors to get down to the property at some point, whether it's during due diligence, whether it's after we buy it. We have no problem with setting up a tour with our on-site so you can get and see what you bought, because I think it's critical for people to see what they're investing in. So it also gives people a lot better feeling knowing that, okay, this is what it is, as opposed to just an email every 3 months with an update on what's going on. So, we encourage more interaction with all our investors, whether it's the smallest investor we have or the biggest. We try and get out and get in front of our investors as much as possible. I'm going to Charleston tomorrow to take one of our investors out. We just sold a deal. I'm flying down to Charleston just to take him out to dinner for a deal we just sold. So it's we definitely encourage that.
What does it look like if we're using the example of a divorce and somebody has to liquidate their assets to make the divorce amicable? What does it look like for somebody to get out? Let's say they're in the deal for 5 years. Is there a cash out option?
So the three things I tell everybody going into the deal, which, maybe it's a little too honest. Obviously, it's an investment. There is the outside potential. The whole deal goes completely wrong. So it's a regular investment in anything. It could go to zero. Now, realistically, it has not happened yet. But obviously, every deal is a risk. The second thing is, in that situation where you do have to get out, if there is the opportunity to refinance or sell, whether you have a large or smaller portion, that could dictate it. We have some deals where we have a 90-10 split with a partner, where that partner has refinance sale rights, where they can say, okay, hey, let's sell this now. We have to go get 3 broker opinions, pick a broker, and sell it. But then in addition to that, all of our equity partners, we do the 3 ways is, 1, you could find someone to buy you out. Someone in the deal can buy you out. Or the worst case scenario is if you need to sell today, you most likely will take a discount on your initial investment. So if you invested $100,000 and you have to sell yesterday, you'll offer that up to all the investors in the deal, and you won't say, hey, there's an investor in a bad situation, but you may have to take a discount. So those are really the 3 things that could happen.
So you could actually word it into the deal that the investors have first right of refusal before it goes up.
Yeah. Yep. What we like to do, I don't like to ever be the person negotiating on behalf of one side or the other. I don't think I'm in a place to do that, because I know their situation, so I can phrase it in a way that could hurt. What I like to do in any situation is I'll offer up an email saying, hey, and we've had this happen, an investor is looking to recapitalize some of their money. Is there anyone that would be interested in buying more shares or buying that person out? If they say yes, I just make the direct introduction, say, hey, Mr. Investor X, Mr. Investor Y, here you go, have a conversation, figure it out, let me know what the outcome is. And if you don't like that outcome, no hard feelings, you can find one of your own friends to buy you out, and now you have to go to the bank and get bank approval. Or, if the situation's right, internally, we do have, some flexible capital where you say, hey, here you go, we'll buy you out at X price. So we work the best way we can. We give everyone the first right of refusal to buy someone out before we go out and try and find someone to take them out. We do the best we can, but it's definitely not a perfect system. I think it's an as needed basis.
Yeah, no, it's interesting. And so, tax time. So tax time comes. Do you issue? Is it a K1 that you receive at the end of the year?
Yes.
So it's a K1. So you basically do have ownership in that property, and you're getting that K1 based on the income that you received, or would it be that you're getting quarterly checks or monthly checks? How would that work?
Yeah. So depending on the deal, some of our deals are quarterly distribution, semi-annually, monthly, depending on how many investors, so on and so forth.
Wow. Oh, looks like he dropped. That's the downside to
Skype.
Being on the road.
Call him back.
There we go.
Well, it could be a good word for our sponsors right about there.
So sorry about that, guys.
No worries.
My phone cut out. So it depends on the deal whether the updates are quarterly, semi-annually, so on and so forth. But you're at the end of the year, typically right around the deadline, you will get your K1, which will show you exactly what you got, whether it's a loss for depreciation, whether it's income. You'll get that as per whatever your equity interest was in that deal and what a result of that investment was.
In rule of thumb, so say I was to put in $100,000, and are you looking for like an 8% return on the money that you put in? So say, for example, if I put $100,000 in, you could get somewhere around the area of $8,000 a year for income?
Yeah, so basically what we do is we typically have a preferred return. It's typically between 6 and 10%, depending on the deal, and then we'll have an equity split over that. So rule of thumb: if you invest $100,000,
so about $8,000 on that $100,000.
So about $8,000 on that $100,000, which is 8%.
Well, we got a little echo there.
Very.
John, I'm going to have you take your phone off speaker if you can. I think that's what's causing a technical issue there.
Yeah.
How's that?
All right.
Technical difficulties.
I think I'm going to drop them for 1 sec here.
Okay. So just to kind of add on to that point, I mean, 8% return, where else are you going to get 8% on your money? So, I mean, if you're looking at bank accounts, what's that at? Like maybe 1%.
Where'd I lose you?
There we go.
Yeah, so we just kind of keep going on that point. I mean, 8%, where else are you going to get 8%? I mean, I don't know many
Exactly.
places, I mean, it's
we feel it's a very, just like we feel like it's a very attractive investor to, very attractive return for the work that's put in for that return.
Well, I got to say, John, so if everyone's looking for information from you, again, can you just tell us your contact information on the website? So say someone's interested, they could just kind of shout out your website.
Yeah, I would say, the best place to reach us is on our investment. Our investment company is Toro Real Estate Partners. So TORO Real Estate Partners. And the website is ToroREP.com. And then on there, our contact information's on there. There's an investor questionnaire that someone could fill out if they're potentially interested. And in addition to that, my direct email is John, JOHN, @ToroREP.com. And then my office line is 516-268-3500. Those are the best ways to reach me. I'm pretty reachable, whether it's an email, as long as I get 24, 48 hours notice, I typically can make time and carve out, 30, 40 minutes for anybody, whether they have any questions, interest in investing, whatever that looks like, I'm here to, help anybody further their career as an investor, as an active investor trying to get involved. If I can make an introduction, I'll do everything in my power to, get that done.
Well, it's a fascinating show. I mean, there's a lot of, I know a lot of people that, try to get into this market, but not a lot of people are successful with it. So, John, I want to kind of take my hat off to you. It's, since, doing it for not that long, you've been able to go up to 2,000 units is miraculous. And if anyone's listening to the show, I highly recommend checking out your information. And I know I will be checking it out after the show for sure. And again, I just want to thank you for coming on the show.
No, Brian, guys, thank you very much. It was a blast. I had a great time. And, if anything we can do, let us know. We're here to help.
Sounds good. So,
awesome.
In closing, I just want to let everybody know, Easy Money New England. Every week we're bringing you money-making opportunities, money-saving tips. And like we always like to say,
there's no such thing as easy money.
It's a new day. It's a new way.
That's the problem.
It's a new way.
Hi, folks. It's Brian Damico, owner of New Fed Mortgage, and I'm really excited to introduce Fast Track Mortgage, our new online system that gets you approved in less than 15 minutes. Whether it's a refinance or a new purchase, just go to newfed.com anytime, day or night, and click on the Fast Track Mortgage button. Fill out the form, and within 15 minutes, we'll approve your loan at the lowest rate possible. Don't waste time dealing with big banks. We're local and here to help you close your loan fast. Just go to newfed.com 24/7 and get approved in less than 15 minutes. Fast Track from New Fed Mortgage. Now that's a new way to get the loan you need fast.
877 New Fed.
Subject credit approval, Equal Housing Lender, NMLS number 1881. College website for details.
877 New Fed.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Cafe, the United Podcast Network, its partners, or affiliates.